Let's practice cash reporting on the balance sheet. Before we start, subscribe to our channel for more videos.
Here is the financial data we need to analyze. The company has a checking account balance of $32,750. It also holds cash on hand of $1,150. In addition, it has post-dated checks received, totaling $6,400, and certificates of deposit worth $80,000.
Our task is to determine which of the given items qualify as cash, and calculate the amount that should be reported on the balance sheet under cash caption. Here you can see possible options for the answer. Let's find out which one is correct.
Let's revisit what exactly is cash on the balance sheet. Cash refers to funds that are immediately available for use. This includes money that a company can access right away, without restrictions. Only those items that can be used instantly to settle obligations are reported as cash. If the funds cannot be accessed immediately, they will fall under other categories, not cash.
Now, let's analyze each item of the given information one by one. Our first item is the cash in bank. Specifically a checking account, with a balance of $32,750. Checking accounts are demand deposits, meaning the company can withdraw or use the money at any time. Because the funds are immediately available, they qualify as cash. Therefore, we include this amount in the cash balance.
Our next item is cash on hand, with a balance of $1,150. This represents undeposited currency, coins, or petty cash, kept by the company. Since these funds are immediately available, and can be used for payments at any time, they qualify as cash. Therefore, we include this amount in the cash balance.
Our next item is post-dated checks received, with a total of $6,400. Even though the company holds these checks, they are not usable until the date written on them. That means, the funds are not immediately available. Until that date, they must be reported as receivables, not as cash. Therefore, we exclude this amount from the cash balance.
Our last item is certificates of deposit, with a total of $80,000. Certificates of deposit are generally classified as short-term investments. They are not reported as cash, unless the original maturity at the time of purchase is 3 months or less. In that case, they would be considered cash equivalents. But here, we assume the maturity is longer than 3 months. That means, these funds are not immediately available. So we exclude them from the cash balance.
Now let's calculate the total cash to be reported on the balance sheet. We include the checking account balance of $32,750 and the cash on hand of $1,150. Adding them together gives us a total of $33,900. Post-dated checks and certificates of deposit are excluded, since they are not considered cash. Therefore, the correct amount of cash on the balance sheet is $33,900.
From the possible options of the answers, the correct one is answer A. This is a solution of the given practical problem.
Thank you for watching. Subscribe to our channel not to miss new videos.